So if you guys watched last video that I posted, the action that we're seeing in the overall market right now with SPY and QQQ, which is the Nasdaq and the S&P 500, it would be no surprise to you to see what we are seeing right now. We talked about it. I showed you guys exactly how I was anticipating it was going to play out, and what we're seeing today is that exact setup playing out. So today we're going to keep it pretty brief. We're just going to talk about where the market's currently at, give you guys a quick update from not only a fundamental side, but also a technical side with a heavy focus on the technical side, because I am a technical trader. We're also going to jump into some of the earnings that we're going to be seeing this week, as well as the economic data that's going to be released. So let's go ahead and jump right on into the charts. We're going to jump into QQQ, which is the NASDAQ 100. We're going to talk about where we're at right now, where we anticipate we're going, and why we believe that will be the case. So let's jump into the shared screen. So the first thing that I do want to bring up, I will leave the link to that previous video right up here so you guys can check it out and kind of catch up on what we talked about previously, and then you guys can compare to where we're at right now, and you're going to see that what we're seeing right now in the charts is exactly what we were talking about was potentially going to happen, and that's exactly what actually happened. So let's go ahead and grab a drawing tool and talk about where we're seeing some of the levels from the indicators, where we're kind of seeing some of the support and resistance levels, what we're breaking, what levels we're breaking, and why we anticipate that we're going to see more downside in the overall market. So kind of bringing some technicals into it, we're obviously seeing some hesitation with rate cuts, which hasn't been really helping the overall market. We've actually been seeing the Fed kind of stalling on cutting rates, which is causing people to, have more of a bias towards the fact that inflation is going to last a little bit longer and higher rates are going to last a little bit longer. So they're losing faith in the fact that we're going to see those rate cuts this year, and which is a very likely possibility. Not saying that's going to be the case, but something definitely to consider. So there's that happening. We also have the Iran attack on Israel, which has been kind of creating a little bit of uncertainty within the markets, within the economies, within the political realm of things. So that's kind of been, bringing a heavy burden onto the market, as well as you have earnings that are reporting and obviously economic data that's not necessarily coming in as great as we were hoping it would be, or at least as great as the Fed was hoping it was going to be, which is exactly why we're not seeing those rate cuts happening. I do want to say we're going to jump into some of the economic data that's going to be released and economic events that are happening tomorrow. Actually, we're going to be hearing from Jerome Powell again. So what we're seeing right now, we're going to go over is a thesis that we're going over, what something that we're anticipating. Again, just like the previous video, it was a thesis and it ended up playing out, and we were prepared, and we're taking advantage of that move that's coming to fruition right now because of how we were preparing ourselves from what we were seeing from a technical standpoint. So again, we're just going to jump into the technicals. We're going to talk about where we're at, what levels we're breaking, and why we anticipate that we're going to see what we're going to see. So the first thing I do want to say is last week or the last video that we made was pretty much the beginning of this consolidation period right over here. We were talking about seeing this consolidation happening, which we are seeing right now. It did happen, and we were just waiting for us to break out of this consolidation to either the upside, which would have been new highs for the overall market, for the S&P 500 and for the Nasdaq, or break lower, which is what we are beginning to see happen, which we saw happen today on Monday. So we were coming to that conclusion at the end of last week when we started seeing more weakness in the market. But this week, opening up on a weak note, we're pretty much kind of getting that confirmation that, hey, we are possibly starting to see the beginning of this sell-off that we've been preparing for. If you've been watching the channel, you know that we've been jumping into SQQQ. I talk a little bit more about the positions that I've been jumping into and we've been jumping into as an academy. And you can definitely jump on board this by just watching these videos, or you can join the team in the link down in the description if that's something that you would be interested in. But again, we're trying to keep this video short, so I'm going to just jump into what we're going to be looking at. So the first thing that we wanted to pay attention to and kind of get confirmation is a break out of this ascending channel that we were trading in right over here. If you guys can see, we've been trading in that channel since pretty much October of last year. We started, and then we've been kind of trading up and up and up and up and up. And what we were trying to see is a break out of this channel. Necessary, it didn't necessarily have to be to the downside right away. It could have been consolidation period, which is something that we're seeing right now. But if we would have seen a continuation, it would have been a little bit tougher for us to really draw the conclusion that we're going to see a sell-off. The reason we started jumping into a short position and preparing ourselves, excuse me, is because we did begin to see overbought levels starting to get hit and triggered pretty much beginning of the year. And then it kind of, the pace of how quickly the price was moving up this channel was slowing down. And inevitably, we were anticipating a consolidation period. Now, coming out of that consolidation period, we can either go up or down. It doesn't necessarily mean that we're going to start seeing a sell-off. So that was more of a, hey, we're going into this consolidation period and we're getting prepared for a possible short because of how overbought the overall market was. Again, jumping into that previous video that I did, I go over a weekly chart, which on a weekly chart, the market is extremely overbought. We're looking at a daily chart in this video here, but from this daily chart, we can see kind of where we're anticipating the direction of price action to start going. So the first thing was us seeing a break out of this level. We saw overbought levels. We saw a break out of this ascending channel. We started consolidating, and the next thing we wanted to see was a break not only below this blue line right over here, which is the exponential moving average. We wanted to see a break below that and a hold. And then the second part to that is we actually wanted to see a break either up out of this consolidation period or down out of this consolidation period. Today, on Monday the 15th, we actually saw a break below that consolidation period. Now, what we do really want to see is we want to see that price not only continue, but come back up, retest this previous support, and have it act as a resistance, get rejected, and then see more downside to the downside. That's going to give us extreme confirmation where we're going to double down on our size in our SQ position when we see that confirmation, right? So we're going to be taking advantage of the market selling off by getting into SQQQ, which goes up when the overall market goes down. And then the levels that I do want us to pay attention to, not only the team, but whoever's watching this video as well, is a couple levels that I want to talk about. The first one's going to be the 410 level right over here. And that was actually a previous resistance on the way up. We had a bit of a tough time breaking above that. We got rejected here. We got rejected here. And then when we came down, we found support here as well. So this is a pretty powerful level to pay attention to. 410, that's going to be the first level of potential support or potential resistance for us to continue the move lower. If we do break below that 410 level, we're going to see that next level act as that 390 to 400 level. This was also a very, very strong level. We saw a support here. We saw a very tough time breaking above here. And then that was pretty much it for these 2 points. But this was also a resistance level back last year when we tried to push higher in this leg of the ascending channel, right? So this ascending channel here, that was the peak of that level. So that 410 zone is going to be a pretty crucial level. 390 to 410 is the general zone to pay attention to. But that's, again, if we break below the 410 level. 410, we break lower, and that 390 to 400. That's going to be that next level. Now, if we do break that level, the next level below that we're going to be paying attention to is going to be the 370 zone. So I want you guys to pay attention to these 3 levels here. The first level is going to be 410. And this is on QQQ, and we're looking at the daily chart. And the reason we're looking at QQQ, not the S&P 500, while they both move the same way, because we're trading SQQQ and TQQQ. So for instance, in this situation, we're trading SQQQ, which goes up when the overall market goes down. It is more correlated with QQQ, which is the NASDAQ 100. So that's why we're doing all the charting, and I'm showing you kind of the whole process on QQQ versus SPY. If you're trading anything else, definitely pay attention to SPY. SPY moves in a very similar fashion. So whatever we're going over here, SPY is probably going to do the exact same thing, right? So the next level below that is the 390 to 400 zone. and the next level below that is going to be the 370 zone. So those are the three levels to the downside. Either of these can act as a potential support, and we can see a bounce here. The first thing I want you guys to kind of pay attention to is that 410 zone. That's going to be that first level for us to really pay attention to. That is going to be the first level that I'm going to be starting to look and consider and kind of reevaluating the overall direction of the market. If fundamentals are staying heavy on the overall market, if the economic data is coming in and the price actions confirming, we're definitely gonna adjust our stops, but we're also gonna take advantage of more downside if we're gonna see more downside, right? I do want you to note that while we're looking at this daily chart here, and those three levels, I do want everyone to pay attention to. I do want you to note that we are sitting at 40, right? Oversold territory is 30, right? So we don't have necessarily a whole lot of room to the downside. There's a great amount of potential for profit when you're taking advantage of this move, whether it's to the 410 or even the 390 zone. 370 would be incredible, but this is kind of it's more of a long shot than 410. 410 is the most likely level that we're going to see. 410 possibly down to 390. 370 is kind of stretching it, so I wouldn't be necessarily too excited about us heading all the way down to 370. But 410, 390, very, very realistic for the amount of time that we have and kind of what we're seeing from a technical standpoint. If things get pretty crazy in the world and the economic data is not going to be supporting, the fundamentals aren't going to be supporting, it's not absurd to think that we could come down to 370, but I do want you guys to kind of stay level-headed and kind of have realistic targets, which would be right over here. And we're going to measure the potential for profit to that point here in a minute, but I do want you guys just be aware that we're not all the way up here at 60 or 70 where we have a whole ton of room to go down on the downside before we become oversold on the daily chart. So something to pay attention to. We haven't seen any signs of convergence to the upside on the MACD, so this is good. We like that. And we are obviously starting to see more of a divergence versus a convergence, right? So it's starting to look good for us on the MACD. Price action is looking good. We're breaking below key levels. So this is kind of what I want you guys to pay attention to. Let me clear this drawing and measure out the potential for profit. That way you guys can kind of see what the potential for profit is on QQQ just itself. And then I will show you guys what the potential for profit reflects to in SQQQ. Because it's 3x leverage, you can pretty much just multiply it by 3. But from where we're at right now, I'm not going to measure, or I can even measure from kind of where we started preparing so that you guys can kind of be aware of what that potential for profit is. If we're going to that 400, let's find the average 400, we're looking at about 8 to 9% on QQQ of a drop, right? And so what does that translate to in SQQQ, which is what we are paying attention to? 8 to 9%. We're looking at that next level down. So that's going to be that 410, 400, 410 zone. So that next level up on SQQQ is going to be approximately $14, $15, about the simple moving average, the 180 days. So if we measure that, we're looking at about 36 to 35 potential profit on SQQQ if we return to that simple moving average. Again, going back to QQQ, coming down to that 400, 390 to 400 zone, simple moving average right here, and SQQQ, same simple moving average right over here, potential for profit to that zone about 34%. So that's what that translates to in SQQQ if you're taking advantage of that move. So I just wanted to give you guys a quick breakdown of what that potential for profit is. Obviously, manage your risk at whatever risk tolerance you have and risk to reward ratio that you have. But for us, again, if you guys go back, watch that previous video that we did on how we were preparing ourselves, how we were positioning ourselves, and how we're going to be taking advantage of this. Those two targets that I talked about, 410, 390 to 400, and 370. Those first two, 410 and 390 to 400, those are our realistic targets. That's where we're going to be looking to lock in profits. We don't want to get overconfident. We want to be realistic. We want to lock in profits at a realistic point. So that's going to be kind of our target for what we're looking at, and we're going to be adjusting our stops accordingly. So that's from a technical standpoint where we're at. Again, just a reflection on kind of what we were talking about and what we're seeing right now. It's exactly what we were talking about. So seeing this and having this play out, what we just talked about today, is very, very realistic and a very high probability of happening. So that's everything that I want to talk about on the charts. I do want to jump into some of the economic data. Again, tomorrow, Jerome Powell will be speaking. So I do want you guys to pay attention to that because, just like we were talking about those interest rates, there might be some points and some golden nuggets to pay attention to. So I do want to kind of run through all the economic data so that you guys are prepared for this week. Go over what we saw today. Today at 5:30 in the morning, we had the core retail sales for month over month being reported. 0.5% was forecasted. We saw 1.1. So we saw it be pretty resilient. Retail sales being pretty resilient. So that was kind of a nice thing to see, I guess, for the overall market, but it didn't seem to help that much. Again, month over month for the month of March, retail sales. So that was core retail sales. This is just retail sales. Expectation was 0.4%. We saw 0.7. Again, resilience is there. Didn't really help the market too much. So that's pretty much what happened today on Monday. Tomorrow, the big things that I want you guys to pay attention to, and I think you guys should pay attention to, is the Fed chair speaker or Fed chair Jerome Powell speaking tomorrow, and that's going to be at 10:15 Pacific Standard Time. If you guys are on different time zones, make sure to translate that to whatever time zone you are paying attention to. I do anticipate the market's going to move pretty significantly, or I mean, I don't want to say pretty significantly, but it will definitely have an impact on the overall market. So make sure to be paying attention to that. And if you see the market moving in one direction or the other, whether it's going to continue to help out bull or bears that are, taking control of the market and it's going to push the market lower, or if we're going to see a bit of a, attempt to regain those highs that we were at, you're going to know that that's pretty much why that's happening because of Jerome Powell speaking and what he says. So paying attention to what he says is going to be very, very important. On Wednesday, the things that we want to pay attention to is crude oil inventories. That's going to be an important one to pay attention to. The other ones we're going to want to pay attention to is more Fed speakers speaking at the end of the day, approximately 2:30 and 3:30. We're going to see two more Fed speakers speaking. Thursday, we're going to have initial jobless claims, continuing jobless claims. We're going to have Fed manufacturing index being released. We also are going to see existing home sales for the month of March being released, Fed balance sheet being released, another Fed speaker. So lots of Fed speakers this week. And Friday, again, we're going to see Fed Goolsbee speaking. Again, another Fed speaker speaking. So lots and lots of opinions going to be thrown out and kind of ideas being put out there to consider. So I would expect this week to be pretty intense, and that's not the end of it. We did see treasury yields going up as well, so that is making bonds a little more attractive than the market. So again, contributing to the selling that we're seeing people with more money, that big money, kind of pulling away from the market and going into bonds because those are a little more safer and they're getting a good return, right? So on top of everything else that we're seeing happening, you got that going on as well. And the last thing that I want to touch on, besides the economic data and all those Fed speakers that we're going to see, we actually have a pretty decent lineup of earnings this week as well. We had Goldman Sachs reporting before market open on Monday. We also had Charles Schwab reporting. We had First Bank reporting after the market closed. Bank of America is going to be reporting tomorrow morning before the market open. Johnson & Johnson reporting, Morgan Stanley reporting tomorrow as well. Commerce Bank reporting, all of those before market open. After market close, we're going to see United, JB Hunt. We're going to also see Fulton Financial reporting. Wednesday, we've got Abbott reporting. We've got Discover reporting, another financial institution. U.S. Bank Corp, another one. Bank United, another one. Bank OZK reporting. First Community Corporation reporting. Citizen Financial Group reporting. And Thursday, we also have KeyBank reporting. We have Alaska Airline reporting. We also have Netflix reporting after the market closes. Nokia reporting. American Express reporting. P&G reporting. And I would say that's a pretty decent lineup. Lots of financial institutions reporting this week, so this is going to be very interesting for us to pay attention to. So on top of everything else that's going on, I think that this week is going to be a pretty big one. And the fact that we are starting to see the week start off with bears in control, pushing the market lower, it's hard to say that, we might see a push up to the upside. I do believe that we will probably see these 410 to 390 to 400 zone. This general area, I will expect us to see come down, retest this zone. And another thing that I do want you guys to know is not only does this zone make sense from, you know, those support levels and those resistance levels that we're going to be potentially finding support and resistance at. But this green line right here is the simple moving average. The 180-day is what I'm using. 200 is pretty much the same thing. Very small difference. It would probably be right over here. So again, it comes down to these exact levels. So for us to come down, retest the simple moving average, that would be a very, very likely possibility because we haven't done that at all this year. We haven't really even broken below the exponential moving average this year until the last couple of weeks where we started consolidating, and now we're finally breaking not only below the exponential moving average, we're breaking below consolidation period or the consolidation zone that we're in, and we're headed straight for that simple moving average. So that's pretty much what I wanted to go over with you guys. There's a lot to digest. Rewatch this video. Try to make sure that you captured all of these points and the concept and the thesis behind the plan that we talked about previously a couple of weeks ago and the plan that we're talking about right now, what we went over from a technical standpoint. Let me know what you guys think in the comments down below. Do you think the market's going to come down to that 400 zone, the NASDAQ 100? Are we going to come down to that 400, 410 zone, 390 zone, 370 zone maybe? Or are we going to see more highs coming in before we see those levels come down and get retested? Let me know what your thoughts are in the comments down below. Let me know what you think about interest rates. If you think that we're going to see those happen and get cut this year, I would love to know that. I'd love to know what your thought process is on that. And honestly, whatever else you guys want to share in the comments down below, if there's maybe a stock that you guys want me to go over with you guys from a technical standpoint and kind of jump into what my thoughts are on that, drop that down in this or in the comments down below as well. Hopefully you guys found this helpful. I'll catch you guys on next week's Stock Talk video, and let's see how this plays out. And if it does play out, make sure to smash that like button so that it does play out. Jump into SQQQ and take advantage of this position that's going to be going up as the overall market sells off. Hopefully you guys found this valuable and you guys gained something from this, and I'll see you guys on next week's Stock Talk video.